Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Well, we're going to go inside China, at least in some specific inside China ETFs. Eric Dutrem, our ETF strategist, is here, and he's going to tell us more about these. I have to admit, I'm a little confused here, but let's start out with the fact that China recently announced some important reforms, right?
That's right. Topping this list is kind of an easing of the one-child policy. Pretty much everyone's familiar with that. But this new policy is going to be, if one of the parents is an only child, the family can now have more than one kid. So this is going to really be a huge demographic boost over the long term. And it's something that people have been thinking China's going to do for a while, try and help their demographics play out a little better. And then also we've seen some changes in the financial system, kind of a liberalization of that sector. And this has boosted some China technology, China financial ETFs lately. And then also there have been other changes that are pretty important as well. And overall, it's just been a pretty good week for China ETF investors.
So there are other ways to play exposure to that country. What's the difference?
Yeah, China's kind of an interesting market. There's a couple different share classes. Some of the most famous are H shares and so-called red chips, and these trade in Hong Kong. And then there's also ADRs, which investors know that are trade on the New York Stock Exchange and the NASDAQ. These are called N shares. And then there's also what are called A shares. I know it gets kind of confusing here.
I'm confused myself.
But the A shares are more for local investors, and they trade in the Shenzhen and the Shanghai markets. And these are only for domestic Chinese investors to invest in, although it's starting to open up into this market as well with the QFII process, which allows some companies to buy and sell these A shares out on the open market.
So I'm sensing then by what you're saying that these A shares are a little bit better. What makes them better?
Well, in the N shares and the red chips, those you're going to get some mega caps. You're going to get your China Mobiles, your Baidus, these really large multinational companies. But in the A shares market, you're going to get a little smaller companies that are more domestically focused, going to be a little bit more closer to the ground, going to play more off some of the trends that I was talking about in the first slide there. So these could be a little bit better play for some investors, and because they're kind of closed off, you're not really going to get these kind of securities in any of the other China ETFs or really the other emerging market ETFs that are out there. So it could help broaden your exposure to what is the second biggest economy in the world.
All right. So, examples always help crystallize this stuff for us. What do you got?
Yeah, and since the market's kind of closed off, you can't really access these unless through these three ETFs that I'm going to talk about here. And the first one here is PEK. This is from Market Vectors. It's actually the first such fund to focus on this A shares class. You're going to get consumer, industrial, and financials are the three biggest sectors. And because the market's a little closed off, they actually use swaps based on the CSI 300 index. And that's how they gain their exposure to the market, although they're in talks with one of those QFIIs to get direct exposure to this market, but they don't have that yet.
Okay, and you've got a cheaper choice, right, in that space?
That's right. We got a Power Shares fund is the next one.
We'll say less expensive. I always hate that word cheaper, it's negative connotation.
Exactly. This is a Power Shares fund, also has a similar focus in terms of sectors, but they get their exposure kind of a obscure way, and just to add to the complexity here,
sure, why not?
They get their exposure through a few futures that trade on the Singapore Stock Exchange. So you're kind of going a very about way to get access to China, but it's going to give you similar exposure to a lot of the same sectors and the same companies that we saw in the first ETF of PEK.
All right, and then you also have an entry here from Deutsche Bank?
That's right. This is the last fund in this list, and it's CHNA is the symbol. It's a pretty new fund, just came out a couple weeks ago, and actually has over 100 million in assets already. And I think the big reason for the success here is that this offers direct access to the China A-shares market. And they've partnered with a Hong Kong firm to allow U.S. investors to have this direct exposure. And this is the first time that any fund has given investors here in the U.S. that exposure.
All right. How long have these been available here?
The PEK one has been around for a little while, but the other two have come out this year. So it's kind of a market coming into its own. And now that China's surging back here in the last couple of months, it's expected that this sector could grow and become a little more important for ETF investors.
All right. Well, do you own either of these?
I do not.
All right. Eric has other interesting ETF articles in the ETF section of our website, and there's other articles written by our equity research folks and our ETF research folks in that part of the website as well. If you're not there already, go to Zacks.com. You can link to that section, the ETF section of our website, right off the home page with Eric. I'm Terry Ruffalo.